This is Backroads of Illinois, server to farmers and ranchers in central Illinois in the Midwest. Today's edition of Backroads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on today for our program. I'm Cesar Delgado on today. We were bringing you on soil testing from farm and retail growth at Farmers Edge in Iowa, and I am talking with John Barr from EverAg. We were talking about the fundamentals with the corn markets, especially with the world supply and demand from last Friday. This has been Backroads of Illinois.
We're coming up into harvest time. After that's when you want to start your soil sampling and your soil testing. I think for me that the number one takeaway I want to leave people with is always to come back to why are we doing this in the first place? Why are we doing any of these soil tests? And so we can understand more about what's happening in our fields, what we need to do next year, and just use that to plan. You can't manage what you can't measure. So we love to be a part of that solution.
We're approaching the harvest season for next couple weeks ahead. After that, if you want to do with soil testing of post-harvest season. Eileen Bernard, Director at the Farm and Retail Growth at Farmers Edge. She is recommended to get soil testing of post-harvest season without the rains weather.
100%. The more offense we can do against some of these late season diseases and all of the other pressures that we have, a healthy crop is going to put you in the best position you could be in to defend against that. Yeah, absolutely.
100% the more offering to get soil testing from the fall than in the spring. You have less late season diseases in the field. You got soil testing in the fall.
And the way that we recommend it, we have protocols available we're happy to share. But you can look at your older leaves and your newer leaves and see if you've corrected for any of your deficiencies or just a really better understanding of what's happening right now so you can be proactive and address it.
The way. We were happy to share recommendations on the soil testing. You can look at your old leaves and new leaves and diseases. We recommend for soil testing from the fall. You can apply right product on your sprayer.
Harvest is approaching fast. Once this year's crop is out of the field, it'll be an ideal time to do some soil testing. Eileen Bernard, Director of Farm and Retail Growth at Farmers Edge, said farmers need to be purposeful with the tests they conduct.
You're exactly right. We're coming up into harvest time. After that's when you want to start your soil sampling and your soil testing. I think for me that the number one takeaway I want to leave people with is always to come back to why are we doing this in the first place? Why are we doing any of these soil tests? And so we can understand more about what's happening in our fields, what we need to do next year, and just use that to plan. You can't manage what you can't measure. So we love to be a part of that solution.
Bernard said that having healthier soil can help crops to better handle late season disease pressure.
100%. The more offense we can do against some of these late season diseases and all of the other pressures that we have, a healthy crop is going to put you in the best position you could be in to defend against that. Yeah, absolutely.
Bernard added that the tissue test can offer comparisons between old and new leaves to check if certain deficiencies were fixed, or they can provide a snapshot of one current point in time.
And the way that we recommend it, we have protocols available we're happy to share. But you can look at your older leaves and your newer leaves and see if you've corrected for any of your deficiencies or just a really better understanding of what's happening right now so you can be proactive and address it.
I'm Riley Smith reporting.
Thanks to Riley Smith for The world supply and demand report on corn estimate is 184 and beans estimate is 53. We were bringing it up with John Barr from Everag. We welcomed him to the show on back roads of Illinois. Hey, John, how are you? And glad to join us for today.
Yeah, thank you for having me. Definitely was an interesting report, for sure. I think most expected a little cut to yield, and that's what we got. But we also got a few other changes. We went into that report trading about a 2.1 billion bushel carryout. We added a few more acres. Once again, I think might have came to a little surprise. We're now up over 98 million planted acres on the corn side of things. And we also did get another increase of exports on the demand sector, which right now is justified by the pace of sales that we're looking at. So at the end of the day, like I said, we came in trading at 2.1 billion on the corn for new crop ending stocks, and we left that report trading the exact same thing, 2.1, even with the small tweaks and changes throughout that report on Friday.
Next week will be the quarterly report from the Department of Agriculture on Friday morning at 11 Central Time.
Yeah, you bet. I think that'll be a big one as we look ahead to that September 30th. I think more importantly, the big question is going to be what do they do with old crop ending stocks? And that's going to be the number, I think, especially on the corn side, that guys are going to be watching as we have came through the summer here. USDA continues to print a very tight balance sheet, 1.3 billion. If we look at cash trade this summer across the Midwest, wasn't very appealing really all summer. We did not see those large basis values that we would suspect from a tight crop like they're printing. So I think it'll be interesting to see if they find bushels to add into that old crop carry out and carry into our new crop, which would not be very supportive of the new crop market heading into the fall here. But that's definitely something I'll have my eye on as we get into that September 30th report.
Yeah, it does seem pretty uncertainty on next week.
Yeah, for sure. And it's hard with guys already starting to roll combine and some corn this time of year. It could really swing that market one way or the other as we head into the month of October. So it'll be very key time as well when they release that number.
John, the corn estimate is 184. Whatever the corn acreage is up, I know that the market has a different story. What is your thoughts on this corn estimate?
Yeah, I definitely think back in August when they made the increase to 188.8, that there was some skepticism around that of whether the country could really grow that big of a yield. I mean, that's about almost 10 bushels over last year, which was a record at that time. I do think there is a very good crop out there to grow a 188.8. I am in the same boat. I think that is a little aggressive, which obviously USDA kind of retracted that here last Friday a little bit. So I wouldn't be surprised if there's a few more revisions. But I like to tell guys to keep in mind when we're using record demand numbers, large acreage numbers, and a big yield like this, they can shift a lot of numbers. The big number to keep an eye on is that ending stocks report number when these reports come out. And so with even the slight setback in yield that we got, they shifted some other numbers around to still get back to a 2.1 billion. I don't think you really see this corn market get excited until we drop below that dreaded 2 billion bushel number that we keep fighting with from an ending stocks point. So uh, the yield is going to be printed to whatever they want to print out there. But I do think it is a very good crop. And it'll be interesting to see as guys get picking a little heavier here as the weeks go on. But for me, the more important number is that ending stocks to see where that goes. But a yield decrease report by report here would definitely help that get closer to cutting that below 2 billion bushels.
How about the beans estimate? Are
Yeah,
we going to see more beans for next season in the Midwest?
Yeah, that's a great question, and it's been a very common question, right? And I think something will probably shift as you see about a 17 million bushel, 17 million acre difference right now between corn and soybean acreage. So the question is, will soybeans have to rally to buy acres, or will corn kind of do it by itself? And where I'm going with that is you look at the price of inputs to plant a corn crop or a bean crop, there's a pretty big difference there. It costs a lot of money to get a corn crop in the ground. So it might be a point where just lines of credit don't allow for a whole lot more acres of corn. And we might just see a natural shift back to some bean acres because they are cheaper to plant. And one, hard part that we don't know yet and could be a big player, just like it is this year, is whether or not China comes to the table to make soybean purchases. That's going to make a big difference for this bean market heading into next year, and decide for guys deciding what they're going to plant. But yes, I do think there will be more bean acres next year planted across the Midwest, just from strictly a price point of view, and whether or not corn, how big that shift is to be determined. But I wouldn't be shocked to see a 3 to 5 million acre increase in soybeans next year.
About the biofuel demand, but it's a wild card for the trade barriers, John.
Yeah, absolutely. That is something to follow very closely. We're seeing a lot of bean pops in this market here due to some EPA announcements around blending requirements in the small and large refineries. So that's kind of a take the news as you get it. I don't think anybody has a for sure answer on where that's going, but it does seem to be headed in the right direction, and some improvements coming to those blending mandates to help benefit those markets as well. So definitely something to keep an eye on, and take that news while we can get it and keep taking advantage of selling those small pops in the market that we get from those EPA announcements.
Sure. How about the technical buying in the beans markets with the stocks are low?
Yeah, great question. And I think that is what we're seeing right now. We're at the time of year. Not a whole lot of guys in the Midwest are rolling heavy into beans, so we don't have a great feel on bean yields yet. We know that China's been absent from the market, so that's kind of baked in. So you're seeing an old-fashioned technical trade right now. We have a lot of moving averages sitting down around 10 and a quarter. We're flirting up around 1060 with another moving average. So we're kind of right in the middle today, around that 1040 area. So, Yeah, it's been very range bound, and I think you continue to see that range bound trade until we get some rumblings of what kind of yields are out there, and buying time to see not only what Brazil's planting weather looks like, but also to see if China does ultimately have to come and purchase some soybeans. But like I said earlier, that doesn't look to be headed in the right direction for the time being. But it definitely is catching kind of a 20 cent, 20 to 30 cent range here that we've just been kind of bouncing back and forth in.
How is the fundamentals trends in the corn markets for right now with harvest season without the weather delay?
Placements a little higher, and kind of see what the market, how the market reacts from that.
Mm.
Back to the economy. What is your thoughts on the consumer budget and the job markets?
Yeah, I think it's definitely something to keep an eye on. We saw today, we did get a quarter basis cut um, to interest rates, and not that it's huge, but it's a start, and they made talk indications that we could see some more here by the end of the year. So uh, the economy has been getting by here, but I do think you start to see a shift. Like I said, that job openings number was kind of a big deal now that it crossed below the unemployment number for the first time in basically 4 years. So it will be interesting to see how this economy reacts and what substitutes they use for, different food sources, like back to the beef. And I think another big one with that is as spending goes down, relating it back to the grain markets, travel probably starts to decrease, and that ultimately affects fuel. And fuel is a big part of our corn demand. So that ethanol number that we have plugged in on the demand sector right now is a very large one, and I think can be achievable. But we definitely don't want to see a setback in ethanol usage by fuel. So I think it could be a big factor as we move forward into the next year.
Of course.
Mhm.
Do you like to share anything else that we should have recap of the grains markets with the yield?
No, I think just we kind of touched on it briefly. If we see pops in these markets, whether it be basis bids at your local elevator, or we get a surprise out of some of these reports, and just keeping a sound risk management plan and taking advantage of these little pops in the market while they're offered, because they don't have to last long, and they can flip in a hurry. So just keeping an eye on things. I know it's hard as we get into harvest season, but if you work with an advisor, highly encouraged to stay in touch with them while you're in the combine and the semis this fall, to keep an eye and take advantage of those prices, work open orders at levels that seem to be achievable at this time, and be happy with those sales going forward. And if we get a setback in this market, look at reowning with some call options, or entering back into the futures market that way, to try to catch a little upswing and add back to those prices.
Thanks, John. I am glad to have you on today.
Absolutely. It's been a pleasure, and enjoyed all the questions, and look forward to next time.
This is John Barr from Everett on back roads of Illinois.